Today, we're going to be covering one of my favorite stocks on the TSX, and this is none other than WellHealth Technologies. I'll be presenting 3 different points in this video here. The first one is 2 reasons why the stock has been trending upwards, followed by why did people become so bullish on WellHealth Technologies, and lastly, I'll be giving my opinion if WellHealth Technologies is overvalued today. If you guys are invested in these telehealth companies like WellHealth Technologies or CloudMD, just hit that like button right now, which helps on my channel a ton. I will be releasing another video later on about my experience using CloudMD's platform. I did book a doctor's appointment, so I have a few things to say about their app and give you some insights on what I think about their product. What is going on, you guys? Hopefully you guys are investing safe right now, seeing massive gains in your portfolio, as well as staying away from the pandemic. My name is Daniel, and on this channel, we talk about stock market investing, and today we're talking about WellHealth Technologies. So if you've seen the stock chart for WellHealth Technologies, you might be scratching your head as to why the stock has exploded this past year. If you were to look back to January 2nd this year, you'll notice that the stock was floating around $1.54, and it petered around that level all the way up until March when COVID hit, where it had a very small drop, but then it quickly picked up steam, and today it's sitting at $7.71. The all-time high for the stock actually happened yesterday as of filming this, and it peaked at $8.08. So why is the stock seeing such bullish momentum and an uptick in its stock price? The first reason why I think WellHealth Technology stock is really going upwards right now is because of institutional investors. If we look at the share breakdown of WellHealth Technologies, we can see that insiders own anywhere from 21 to 26% of the shares, depending on what source you look at, and institutional investors own anywhere from 9 to 11% today. And I think this institutional investor portion will actually grow in the coming years, because WellHealth Technologies is becoming a larger and larger stock, which makes it eligible for more and more funds. And the fact that WellHealth Technologies crossed the major milestone of being a $1 billion company, this probably lands them in a larger pool of institutional investors. For institutional investors, when they look at stocks, there's a minimum market cap requirement which they set out in their funds. And $1 billion seems like a fairly round number, which many companies probably hold to. And right now, WellHealth Technologies is still considered a small cap stock, but they're right in the middle of the small cap stock range, which is from $300 million to $2 billion. I think when they cross the $2 billion mark, we're going to see a lot more institutional investor money pour into the stock. But right now, with only around 9 to 11% institutional investor money, I think this institutional investor portion will grow rapidly from here on out. And if we look at the volume of WellHealth Technologies since April, you can see the volume has actually taken off quite a bit compared to the previous period before this. And to me, it's quite apparent that it can't be just retail investors buying into it, because if you're trading 2 million shares per day, multiplied by the stock price of $7, that's around $14 million worth of shares. I don't know if we have $14 million worth of retail investor money flowing into WellHealth Technologies. If I look at some of the past videos made on WellHealth Technologies on YouTube, there aren't that many people watching the stock. And the people who are watching the stock are probably people investing maybe $200 or $500 at a time, not like $10,000 in one tranche. So to me, this is probably institutional money coming into WellHealth Technologies. And when an institution comes into a stock, they're probably buying no less than $100,000 worth, and probably more like in the $500,000 to $1 million range over a course of around 3 to 6 months. The second reason why we're probably seeing an uptick in WellHealth Technologies price is because in the past month in September alone, there have been 3 analyst upgrades. So the first analyst upgrade was from Canaccord Genuity, and they upgraded the price target on September 29th from $6 per share to $8 per share. The second upgrade that we have is also on September 29th, where 8 Capital upgraded their price target of $8 per share up to $9 per share. And the last upgrade that we have is Pi Financial, and they upgraded their price target of $4.90 to $7. So this was about a month ago when the stock price was trading well below $7 per share. And they also gave the stock a buy rating. If we take a look at Yahoo Finance, we can see that analysts there are predicting the revenue for WellHealth to increase from $45 million in 2020 to $70 million in 2021. And the high estimates for 2021 is close to $100 million of revenue. And if WellHealth Technologies were to achieve $100 million of revenue next year, that would put their PS ratio at a measly 11, which is very low for a growth stock like WellHealth Technologies, which is growing anywhere from 40 to 50% year over year, in the past 2 quarters. Previous to that, WELL Health Technologies was putting up numbers like 200 to 400% growth year over year. But like analysts are estimating right now, I think more realistically, a 50% to 90% increase in revenue year over year going forward is realistic. With the uptick of COVID-19 cases and people just not wanting to go to doctor's offices or just going out for that matter, people are going to turn to telehealth services as well as just digital healthcare. I think the reason why investors are bullish on WELL Health Technologies right now is because there's a lot of M&A activity, or mergers and acquisitions. So if we look at WELL Health Technologies and all the news that they've been releasing, they've at least acquired 3 or 4 companies in the past 5 months. And for a $1 billion company to do so many acquisitions in a short period of time, this only means that WELL Health Technologies' revenue is actually going to grow quite quickly. The CEO of WELL Health said himself that he looks up to other tech companies in Canada which are using the same strategy of merger and acquisitions. Companies like Enghouse as well as Constellation Software both use this technique to get their market caps to where they are today. And with so much M&A activity that WELL Health is doing, they're going to need the funding to do this. And that's no problem for WELL Health Technologies because they just received 2 tranches of funding. The first one was from Sir Li Ka-shing, which is the second largest shareholder now in WELL Health Technologies. He owns around a 7% stake of WELL Health Technologies, and that is only second to the CEO himself, who owns around an 8 to 9% stake in WELL Health Technologies. Sir Li Ka-shing is one of the richest men in Hong Kong, and he's a very well-known investor there. He's invested in at least 4 previous rounds of WELL Health Technologies, and the fact that he invested $23 million at a share price of $4.47 versus his initial investments were probably in the maybe 20 to 50 cent range shows that this guy is super bullish on the company. The $23 million that they received from Sir Li Ka-shing, they're going to be using this towards the acquisition of Circle Medical, which is already a revenue-producing asset. They produce around $5 million USD in revenue every year. And that number is only going to grow here on out. Circle Medical has been operating in 35 different states, which now gives WELL Health Technologies an access to those same 35 states. One thing to note about this acquisition, WELL Health Technologies is acquiring a 50 to 60% stake in Circle Medical, so they're not owning the entire thing. So if we were to take that $5 million in revenue and split that amongst WELL Health Technologies and leaving the rest for Circle Medical, WELL Health Technologies is technically taking in an extra $3.3 million from the Circle Medical stake. In addition to this $23 million in funding, they also announced shortly after that a secondary share offering that will raise them around $80 million if all the underwriters buy their over-allotment shares. This $80 million is going to be used towards fueling company growth, as well as just more merger and acquisition. Like, what else is new with WELL Health Technologies? Of course, they're going to keep acquiring companies, and this $80 million that they are going to be receiving is going to be more than enough to buy at least 3 or 4 more companies going forward. And they can buy some pretty big companies with this serious amount of cash. Typically, their acquisitions in the past are anywhere from maybe a couple $1 million to $10 million. But I think for WELL Health Technologies, they're probably using this larger sum of money to make larger acquisitions. And the companies that they're probably targeting is more on the digital health versus what they were doing previously was acquiring clinics. We also got news recently that WELL Health Technologies is building out their Apps.Health platform. And this is basically a platform to allow third-party developers to create apps to be integrated with WELL Health Technologies' EMR system. As this platform grows in the number of apps, I think that this is going to provide more value for the customers of WELL Health Technologies' EMR and going to just rope in a lot more customers. WELL Health Technologies, on the other hand, doesn't need to spend a lot of money to fuel their own internal development because there's going to be third-party developers developing these apps. And WELL Health Technologies really doesn't have to pay them a dime because those app development companies are going to earn revenue when they sell those apps on WELL's platform. And WELL Health Technologies, ultimately being the platform owner, is going to take a cut of that. So you can think of this like Apple having an app store or Google Play having their Play Store. Now moving on to whether I think WELL Health Technologies is an undervalued stock or overvalued stock. So right off the bat, I would say WELL Health Technologies is not undervalued, but they're more like they're a fair valued stock. If we look at their PS ratio, it sits around 28.5. And if we compare that to their competitors like Teladoc and CloudMD, those two are both sitting at a PS ratio of 25. Another company in the States called American Well, they have a PS ratio of around 40 to 41, which is quite insane and overvalued in my opinion when you compare it against WELL Health Technologies, CloudMD, and Teladoc. So right now, WELL Health Technologies is a little bit more pricier than CloudMD, as well as Teladoc, But the fact that WELL Health Technologies is still a fairly small company, they're able to grow their revenues a lot easier than a large company like Teladoc. So between Teladoc and WELL Health Technologies, I think WELL Health Technologies is probably a better buy compared to Teladoc. But if we're comparing CloudMD versus WELL Health Technologies, I think CloudMD might be the better play right now because it has a lower PS ratio and also a smaller market cap. And when you're a smaller market cap company, your revenues are not as high, and it's a lot easier to grow your revenues when they're smaller. So for example, it's easier for CloudMD to grow their $10 million per quarter revenue to $20 million versus WELL Health Technologies to grow their revenue from $30 million per quarter to $60 million. Also, the grass is very green for digital health and telehealth companies right now. The space is not very crowded and there's a lot of small players. So that's why I think for both WELL Health Technologies and CloudMD, they're able to still continue to grow at their exponential rates and grab more market share without having to step on each other's toes. And just a quick note about my telehealth experience with CloudMD, I honestly think this is the future of healthcare. At first, I was a little bit skeptical because can I really do my appointment by just talking to someone over the phone or through video chat? Because typically doctor's appointments are done in the office and maybe they have to take some different physical measurements of you. But to my surprise, I think just being able to talk to someone about your health problems and wanting an answer from a trusted professional, this is the way to go forward for most medical issues. If you can describe your symptoms accurately to a healthcare provider, which is ultimately what you do when you go into a doctor's office, then they can give you a fairly general diagnosis of what you possibly have and prescribe you medication that will help alleviate your symptoms. And I think right now what they're targeting is people who are going to Google and asking Google about their specific health problems, expecting to find an answer on WebMD. But if you're able to talk to a professional who is actually a practicing physician and have them give you their professional opinion as you talk through your own symptoms, I think this is a lot more valuable than going to Google, typing in your symptoms, and reading about the 1% chance of your symptoms being possibly cancer, for example. Because most people who are talking to the doctors and have maybe small symptoms like a rash or certain things like that, WebMD might give you all the possibilities of what this is, including possible cancer, but more than likely this is not. And just talking to a doctor and having them ask you a few questions can quickly determine if you need to see a specialist or if it's just a plain old rash. If you guys enjoyed this video, please smash the like button as well as subscribe, hit the notification bell, and leave any comments down below. One last thing, my price target for WELL Health Technologies right now is that I won't be buying any more shares unless it comes back down to the $7 level, and I will consider based on the technical analysis of the stock when it hits those levels. That is all I have for you guys in today's video. Keep up the grind and have a great day.